Hey everybody, this is Dr. Tom Carr, aka Dr. Stoxx. Welcome to Market Talks with Dr. Stoxx for this 9th of October, 2013. The markets are now closed and we're looking at a chart of the SPY, the ETF representative of the S&P 500. So we want to ask ourselves the pullback that we see off to the far right edge of the chart, is it at an end or do we expect it to continue lower? Well, we should have an answer to that by the time we're done in a few minutes here. First of all, everyone knows now that we're trading against a rather difficult political and economic climate, with emerging markets contracting, with gold falling through the floor, with a government shutdown. Now it's in its 8th day, its second week, with no real end in sight just yet. And looming on the horizon on October 17th is the possibility that the government will default on its debt obligations if the debt ceiling itself is not raised. And the raising of the debt ceiling in itself carries a lot of problems that we'll have to deal with somewhere along the line. In any case, let's take a look at the chart to see what the chart itself is telling us, what the market itself is telling us. We always want to start by drawing in some trend lines. We do have a modest uptrend still intact despite the recent spate of selling. And you always, of course, want to start with your support line, and then you draw your parallel line over the highs secondarily to that. And you can see we've got a nice, almost a 3-point touch here on the support. And we have a resistance line up top that the highs haven't quite been able to match, which in itself is a little bit concerning, but nothing to get too worried about for the short term. We do have a nice looking bullish doji candle here, which is that long tail with a close near the open in the upper third of the candle, and that tends to indicate, after a significant sell-off, a possible reversal in play. And I'm going to guess, just looking at what we have so far, that the market is ready to bounce a bit, and I could see, maybe a 2 or 3 day bounce going forward into the weekend if nothing is resolved regarding the government shutdown. And if the shutdown is resolved, then all bets are off. We'll likely get a very strong relief rally in the wake of that. Let's take a look first at volume. One of the interesting things about the chart is that I have a 12 exponential moving average overlaid here on the volume bars, and you can see that enables us to see very significant spikes in volume. And interestingly, that we see that the volume trend was actually down during the price rise here. That's the strongest price rise of the 3 up waves that we've seen in the last few months, and it was on lowered volume, which is always a little bit concerning. It just tells us that the institutional money, hedge funds, and so on, the investment banks, are not really backing this run like they normally would if they foresaw a great deal of upside ahead. So they might be a little bit concerned going forward. Turns out their concerns were valid. On the downside, as we see the prices pull back here in several occasions, we have three rallies up and 3 rallies down, and we can see that the down rallies tend to be areas where volume is a fair bit on the higher side. That's not always the case. There are several exceptions to that, but for the most part, we're seeing the volume spikes during the downtrends and volume contraction, as we see here, during the uptrends. So again, this is telling us that we are in a concerned environment. It's not one that you would want to make some long-term bets in, but we can play the short-term side fairly easily going forward. Let's take a look as we pull down the MACD indicator. And it is confirming to us what we see in price as well. We see that while price is making higher highs, MACD is making lower highs. So that's a bearish divergence, which is concerning. And it doesn't tell us necessarily the uptrend is coming to an end. It simply tells us that the momentum of that uptrend is beginning to diminish. And what we normally would see going forward with something like that, especially after such a long-term uptrend, is a period of price consolidation or sideways range-bound trading action. And that's what we will likely get if Congress can come up with some sort of compromise and end the shutdown and raise the debt ceiling and all of that. Now, personally, I'm not in big favor of raising the debt ceiling. I'd rather have some tightening of the belt now rather than force it on my children. Nevertheless, if Congress doesn't act in the next few days, we are likely going to see this support line give way and much lower prices ahead. When we pull down the on-balance volume indicator, which is always a good place to look at a kind of collection of volume momentum that would normally support the uptrend, we see kind of a good news, bad news picture here. If we put our support line under the pivot lows, we see that we have recently broken below that, and that tells us that there's some heavy selling going on, some institutional selling going on in the latter part of the recent pullback. That's never a good thing. And on the other hand, we are seeing some higher volume balance highs to confirm the higher highs in price. So you certainly want to see that in an uptrend, in a healthy uptrend, but you want to see those lows above the support line or at the support line. You don't want to see them breaking down below, because that tells us that the volume was much heavier on the downtrend than it was on the uptrend. So here's my best guess going forward. I'm going to say we will get a small bounce, 2 to 3 day bounce into the weekend, maybe carrying over into Monday next week, on the hopes that Congress will patch things together and give us at least a temporary fix going forward. However, I suspect that this uptrend is either going to morph into a sideways trading range, which is the most likely scenario over the next few months, maybe to the end of the year. And the worst case scenario is we hit the October 17th deadline, there's no solution from Congress, in which case we will likely see this low here, right around 157, 156, challenged on the downside. All right, traders, we will see you in the trading room. Be sure to stop off at drstoxx.com. If you haven't tried our premium newsletters yet, give one of them a go. If you need some coaching, a managed account, a webinar, or trading manual to learn a new system, just go ahead and drop us a line. If you email me if you have any questions, drstoxx@drstoxx.com. God bless. Take care.